What's up, guys? Today we're going to be breaking down the past week and a half, past 2 weeks really, on NQ for the ORB indicator that we made. The point of these videos and the reason why I want to come onto YouTube and start making these breakdowns, specifically for free as well, is primarily to show you, one, that it works, two, to really help those that already have the indicator understand which positions are the best positions to take. Even though the statistics show in history that you can essentially follow this blind and still be profitable long term, uh, the idea is still to take the best possible positions, right? Because if you're trading a prop account and you're just blindly following trades, the rules are so strict that you're going to end up blowing the count unless you have proper risk management. So I want to walk you through, really the past 2 weeks of history here. As you can see, we've done quite well, but we're going to break down pretty much every single day individually. I do apologize if this video does get a little long. But first things first, let's go ahead and start 2 weeks back and really understand which positions are the best positions versus the worst positions, right? So if we come all the way back to last Monday, right, November 10th here, we can see what I always want to look for are really three things, right? The first thing is, did we react to the high of the day or the low of the day, right? I want to know if we're trading in between it. I also want to know if there is an 8:30 a.m. East catalyst, specifically red folder news events for the US dollar, right? So these are really three of the biggest things right here, right? On the high or low of the day, we either want to see a manipulation or full break, right? There's going to be some other things that we talk about as well that you can take notes on throughout this video. But first things first, let's hop into these first two positions, right? First of all, this position was considered to be an A+ setup. I'm also going to pull up the FX calendar. We might have less positions. We might have less positions for 8:30 a.m. catalyst because of the recent government shutdown. And if we look, we'll have less red folder events really throughout the week. As you can see here, there were none. They basically got rid of them all. So this last week had zero events, but that's okay. That means we can pay attention more to the price action than we can to things that are fundamentally going on. Anyways, let's hop into some of the technicals, look at the price action here. First of all, first things first, this is V1. We want to pay attention to V1 first before anything. V1 we're primarily going to use on that first candle right at the 9:30 a.m. East open, right? Because the idea of V1 is to take advantage of the New York Stock Exchange opening bell. That's how it's created. It understands where the volume accumulation is happening, and then as soon as it gives you like a directional bias, as it does here, at 9:30 a.m. East specifically, that means it's pretty much a good candle. So before we get into the second position, let's talk about this first position. Here is the high of the day, right? Let's take a look here. We also have the low of the day. We really don't need to understand what's going on for the previous day. We're looking for a very short-term intraday trade, especially when we're scalping or intraday trading. Previous day's volume is it is a nice factor to use or variable to use in your trading, but for this strategy specifically, I found that there really was no correlation between the two. First things first, what do we have here? We have a really strong momentous candle at the New York Stock Exchange open on V1. The biggest thing is that we have a candle closure here above the high of the day, right? When we have that candle closure above the high of the day, right, we can really expect the rest of the volume to carry out, not for the remainder of the session, but at least for a little bit of the move as we're seeing here. That's why you can see in 2 5-minute candlesticks, this thing just absolutely squashed TP. Now, this second trade down here is considered to be a manipulation trade. I did not take it. The reason for that being is with V1, the whole idea again is to take the first 5-10 minutes of the open with V1. Rather, I would switch to V4, but once I've practically won a position, I'm done trading for the day. If I've lost, then I'll somewhat chase with lower risk, but again, risk management is big. Is this still a decent trade from a price action perspective? Yes, right? So this first trade right here is a breakout trade above the high of the day, which is considered to be an A+ price action position. Just making sure this thing is on. This second trade down here is a manipulation trade, right? Because we've taken out the high of the day, price accumulated, and now it's rushing down below the bottom side of the range. So this is still an A setup due to the fact that it is a manipulation trade. The only thing I do not like about this trade is that it's so far late into the session. As you can see, it's at 11 a.m. Eastern. So because the trade is so far into the session, especially it being V1, I don't really want to trade it. I really just want to trade that first hour of the volume for the New York Stock Exchange Open because we are trading breakouts. Let's take a look at Tuesday here of last week. Let me explain what makes it a good position, bad position, everything like it, right? The only one, there's really nothing great about this. I'm about to explain why. Yes, you can still trade both these signals. I'm not telling you not to trade these, but if you are going to trade these, you do need to apply lower risk. The first thing that I'm noticing is we had no reaction with V1 at the high or low of the day. As you can see, the high of the day is over here. And if we take a look at this here, we can see that the first candle opened up. We did already have a squeeze-like reaction within the first 15 minutes, right? So here, let me go ahead and mark out on V1. Here's the 9:30 open. We already know to really ignore V1 today because the first 5 to 10 minutes of the open did not show any reaction, right? Did not give us any yellow candle, gold candle to really signal in, right? So these two candles are too far late into the session now for V1 to really be optimal. The second thing I notice is we do not have a candle closure below the low or high of the day. We're trading in between the high and low of the day. So two more things to basically tell us that these aren't the best positions. The third thing I notice, when we already have a reaction against the range, right, that's also not good. We really want to see this candle push above this high that it's manipulated. Now, the short here does have some probability considering that we did manipulate the high of the range. But again, the biggest thing to understand with V1 here, the biggest thing with V1 is the fact that, we manipulated or we were trading too far late within the session. With that being said, let's turn on V4. As this is a perfect example, one to trade V4. So here's V4. As you can see, it took a very similar loss to V1. Again, the only thing really keeping us out of this is the low of the day. So yes, I most likely would have entered this position here, V4, because it's now 9:45. V1 was looking terrible. What would have protected my position a little bit? We need to pay attention to wicks and rejections at the high and low of the day. So when we have a wick rejection, can't speak English. When we have a wick rejection at the low of the day like we see here, we at least want to start bringing our stop loss down at least halfway down. I'm not telling you to put it to break even right away because we haven't even gone 1-to-1 yet. But because we are wick rejecting specifically on the 5-minute, this happened on the 5-minute or 15-minute, right? Yes, 30-second and 1 minute do have some prejudice, but it's not super important. But again, 5-minute or 15-minute wick rejections on the low of the day scream like protect the position. So worst case scenario here, you would have gotten out halfway here. Now keep in mind as time goes on, we will try and add all of these into the code. That way it just makes it even easier for you. All right, Wednesday of last week. As we can see, this position actually did very well for V4. This is not a high probability position though. I'm going to try and speed run this a little bit. This isn't a high probability position, primarily because we did not break and close below the low of the day. So would have I applied normal or high risk here? No. But just due to the statistical nature of the indicator, it won. V4 and V1 have a 45% win rate over time. So naturally, it still did well. If we managed our risk correctly, once we basically had this candle closure, which was right around TP, we would have started protecting our position. Let's also take a look at V1 here. All right, so V1. One thing I do notice, we did have this nice trend line running up, and we were breaking below this trend. If you have chart vision like I do, you probably would have been able to see this squeeze coming into the market. I know it's a little subjective, so I do want to kind of stray away from trend lines and everything like that. But that's what made V1 really look good through this discretionary lens. But from a high of the day, low of the day standpoint, no, neither V1 nor V4 were considered to be high probability. But yeah, we still could have taken them with lower risk. Now, coming to Thursday of last week, as you can see here, this is a high probability position. This is something we like to see. We do have a slight candle closure, right? As you can see here on the low of the day, right? This little slight candle closure is great. Not only do we have that, but we also have a wick rejection manipulation of the range here, right? So we have two things, right? Manipulation of the range. That's the first one. The second thing is we have a candle closure below this low of the day. And as you can see, price just absolutely flushes down. I'm on V1 right now. It also happened within the first 5 minutes of the open at the 9:30 open. So it's got three major things right there telling you that this is going to be an explosive position. What do you know? Price trended down for the rest of the day. Yes, it did come and retrace back up to here and still managed to rush back down to the lows. But these are the types of positions you want to not full port your account on, but this is where you can apply a little bit more risk. You can be more risky. I would say the win rate does jump above 50% at this point. So yeah, very nice trade on Thursday, and this is where you should be risking more. Let's take a look at Friday. So unfortunately, on Friday, we did have a high probability position lose. Just because it's a high probability position doesn't mean it's going to win all the time. But what does this at least tell me? As you can see here on the 5 minute, we still had a manipulation of the low of the day. We don't always need a wick rejection for it to be a manipulation. It would be considered to be higher probability if this did close as a wick. But I will show you that if we did go to the 15-minute here, right, on the 15-minute, we are a wick rejection, or we are closing as a wick. So where's that position I was just looking at? Here it is. So right here on the 15-minute, it was closing as a wick rejection by the time this candle was developing. So on the 15-minute chart, it would have been a little bit of a wick, but nonetheless, both of these positions are considered high probability. It would have been a winning day if you took both the trades because of the positive risk to reward of the indicator. So yeah, low of the day was a good position. I would have risked a decent amount on this first trade, and I also would have done the same for the second trade. So overall, Friday was a good day. Now let's move into this week, right? Let's talk about these two positions. First things first, let's take a look at the low of the day here. This is now becoming the low of the day. We were manipulating, as you can see, the low of the day and range, which is really, really good. This is a manipulation trade. And as you can see, price actually did end up popping up like crazy. One thing to note, right? You'll see when I'm live trading or in those reels that I'm showing where I speed up the trade videos and everything, I have my tool coming out a lot of the time. Now, that's because I'm looking to measure when we're going one-to-one. Whenever we're going one-to-one, you don't always want to go straight to break even. You actually, at first, want to start moving it halfway, right? Now, when I really start to move it to break even is when we're on the 5 minute and I start seeing these FVG gaps starting to get filled and I see major liquidity levels like so starting to get wicked, right? This is a major liquidity point right here. I don't know if people have the enhanced market structure, but if you do have the enhanced market structure, I'll show you what right here. You can see that is a major liquidity point, and that's what the enhanced market structure is good for, is for understanding where those major points of liquidity are. And it's all done in an objective manner as well. But as you can see, the market had a change of character, starts trending down, break structure, has a major liquidity point. I see that this liquidity point and this FEG on the 5-minute were both getting taken. From there, I would have then moved my stops to break even. So really worst case on this first position, we would have gone break even. Now on this second position here, I most definitely would not have taken that on V1, primarily because it's so late into the session. It's 11:15 a.m. We were not breaking below the low of the day. The new low of the day was actually right here. If we did hop into this position, seeing that we had a 5-minute wick rejection on the low of the day, I would have most definitely started protecting the stop loss at least halfway. Given that we were 1-to-1 and rejecting, maybe at some point I would have then moved it to break even. You really don't need to go into the 30-second like you see me do. I only do that to monitor like little quick movements to see if I want to move my stop loss or not, but you can primarily do everything in the 5-minute. All right, Tuesday of this week. All right. First things first, high and low of the day. That is always the first thing we want to be marking out, right? So here's the low of the day. Here is the high of the day. Was this position high probability? No, it was not high probability. Why? We didn't manipulate the high or low of the day, nor break and close below or above the high or low of the day. V1 also really wasn't the choice here, primarily because it was later in the session, right? Meaning it was at 9:40. It was about 10 minutes after the open. We only really want to use V1 when it's at the beginning of the open. In this case, I would have switched to V4. Just give this one a second. So V4 ended up being the exact same candle as V1. But let's go ahead and explain V4, as that is the version I would have chosen for today. This first candle at the open was an absolute squeeze. If we go back to V1 real quick, let me show you guys something. We did reject the range entirely. That's what V4 is kind of looking for, is to see that squeeze kind of happen, and now it kind of develops this new range. And that's when you kind of know to use V4. But again, was V4 high probability here? Major consensus, no, it wasn't. The natural statistic of the indicator just allowed it to win, right? Given that 45% win rate. Nonetheless, still a beautiful trade. As you saw in my reel, I did take it. But yeah, Monday and Tuesday, I think Monday, Tuesday, and Wednesday of this week were all really good days. Thursday and Friday were absolutely shitty, but shitty days are going to happen. Come over to Wednesday the 19th. As you can see on V4, we do have a high probability position, right? What makes it special? These are the easiest, most simple ones to obtain, or when we break above or below the high of the day, and we get these beautiful runners. That's why you see price close above the high of the day here, and we just absolutely run, right? So beautiful position here on NQ on Wednesday. Let's also take a look at V1. V1 also hit a banger. Now, V1 was not high probability. We didn't manipulate the low nor high. Here is the low of the day right here. Now, if you have trouble understanding where the low and high of the day are right away, what I do is I come here and I go to events after clicking the settings over here, and I click on session breaks. And I make that a nice little dotted line like so to keep it clean on the chart. So here's the high of the day. Here's the low of the day. The range right here on V1, as you can see, did manipulate. So that was the one thing I liked, is that we did manipulate the range. But again, it's not high probability. Still had a V1 banger, which was cool, but better trade in this scenario was V4, considering that we did close above the high of the day. So the next day that we have is Thursday. As you can see, Thursday did have a winning trade on V4 and a losing trade as well. Let's take a look. Was the first buy trade high probability? Yes, it actually was. So if we take a look here, here is the high of the day. As you can see, we did have a candle closure at the high of the day. Did it lose? Yes. Were we able to protect the position? Yes. Let me explain. Here is our risk reward. If we bring this down, did it go 1 to 1? No. It went 1 to 0.5, 1 to 0.75. Did it liquidate anything from the past? Nothing that I can see of importance. Given that it came all the way up here, wick rejected the high of the day of this candle here. Discretionary right now, I would not necessarily have moved it to break it. Not at all. Definitely not. But 25% of the way of the stop loss, or 50, most definitely 25% of the way. I would have definitely started to move the stop loss there. So you would have, like, the whole idea is managing risk, because that's how you're going to become profitable over time with this indicator. It's, you could blindly follow it, but it's just going to be very slow growth if you do. Nonetheless, if you moved it here, you would have only lost 75% of your position instead of 100% of your position. In other words, if you risked $1,000, you would have only lost $750 rather than $1,000. Now, over time, those little trails add up, right? Instead of losing $1,000 each trade, and now you're only losing 500 to 750 a trade and coming out making 1,500 on each trade. Those statistics over time really add up. Now, V4 Thursday right here, we did have a beautiful short. This was high probability as well. Why? Because we were manipulating the high of the day. It wasn't a wick rejection manipulation, but we were, actually it was. Look at that. I didn't even see that. So we actually did have a wick rejection of the high of the day and came to close below the low of the range. This right here, it's a high probability position. So just some quick math for you, right? If we were trading V4 today, right? And from the looks of it, most likely we would have, because 930 squeezed, right? So we would have ignored V1. We would have primarily traded V4. Nonetheless, given that we were in this trade here, let's say we lost 25%, we would have been down minus 750, right? Instead of minus 1,000. Now, given we risked another $1,000 here because it was also high probability position, and we have a 1 to 1.5 risk to reward, we would have came out making 1,500. Now let's subtract 100 for commissions and fees and latency, right? So 1,400, 750, we're looking at around 750, 650. So that's fine. Let me just do some quick math. Yeah. Speaking so fast, I can't even do quick math. But yeah, still 650 on the day would be pretty damn good. Let's take a look at today on Friday. Hold on one second. This is, all right. Let's go ahead and take a look at Friday today. Today we also had a win on V4, which the V4 was actually the only high probability position we had today. I did take a loss on V1. I didn't end up taking V4 today. Let's go through it. So first of all, already 930 candle, that first open was a squeeze. Remember, when we have those squeezes right in the morning here, I'm not saying to ignore it. You can still take the trade like we have here. I did take the trade, but what I saw, price came into this 5-minute fair value gap, right? Mitigated it, touched it, and started reacting. I immediately, if you look at the video, you'll see that I have my stop loss now halfway through, right? Now that it's halfway through, I'm, at least instead of losing $1,000, I'm now only losing $500, right? So managing risk is huge here. But really what made me do it as well is not just the mitigation of the 5-minute, but if we do come to the 30-second, right? And this is what a lot of IFVG traders do, is they wait for, a higher time frame or a higher narrative fair value gap to get mitigated like we did here. Then they're going to look for an inverse fair value gap off of this other fair value gap. So here's the inverse, and as you can see, we had this really, really strong candle here. Let me get rid of this indicator. We had this really, really strong candle here, inverse this fair value gap after mitigating this higher narrative fair value gap, right? It just absolutely smoked it, retested it beautifully. And as soon as we were trading above that candle, I knew like this thing's gonna come flush the stop loss. So I started moving my stops. I didn't want to move it directly to break even yet because we weren't at least 1-to-1. If this position already did run 1-to-1 and have this as well, I would have been break even, no question. But for this one today, I only moved it 50% of the way. So we were able to manage risk really, really well. So considering if we managed risk well today and we had a win yesterday, we still are profitable, right? So that's the idea. Let's bring the indicator back up again. Let me get rid of this. Now, I don't know why anybody took these buys here, and I yelled at some people. I was like, why would you take those? Like, this is in the videos on WOP that I tell you to watch, and this is like one of those big no trade moments. But here's the high of the day, right? We didn't close above the high of the day, right? We wick rejected it, and we closed as like an entry bar. Now, we don't want to take that. If price is wick rejecting the high of the day, we are expecting price to reverse. We are not expecting price to continue to break. This is a most definite no trade. Like, please, if you are wick rejecting the high or low of the day, now don't go against it. Don't start taking the opposite way. If you want to build a strategy around that, you can. I've tried. I'm telling you, after coding, it doesn't work. But this wick rejection right here is basically telling you to stay out. You want to stay out, don't trade it. But what it will tell you for V4, let's come to V4 here. Given that V1 shat the bed, this is when V4 comes to light, right? V4 give us a very similar signal here. Again, don't trade those wick rejections at the high of the day. This V4 setup down here was a manipulation trade, which we love. We love manipulation trades, and we love high of the day, low of the day breaks, right? We had no high of the day, low of the day breaks, but we had one manipulation trade of the high of the day, and that were these V4 shorts right here. And I'm not saying that's why it hit TP, but just due to historical nature, that's why it hit. Everything that was high probability, I think throughout the past 2 weeks, we had one loss. And that was, if I come back here in history, this one. This was the only loss that we had in the past 2 weeks if you were to trade everything high probability, and it would have been this one. And then right directly after, you would have hit a win and been in profit regardless. But that shows you, if you stick to high probability positions and you manage your risk correctly with these indicators, you will do well. And I'll throw up on screen right now, just last week, I passed 2 more challenges using this exact indicator, kind of following my rules. And I do have a whole guide set up on WOP for those that purchase the indicators. Obviously, this is up for free because I want people to see how to properly use these indicators. And now that I am going to start making more long form content, you will see more daily breakdowns of individual setups, hopefully on a daily or every other day basis. So you can see my thought process as to how to trade. This video is going to be one of the longer ones because I did go over 2 weeks of price action, right? But hopefully you can see a little bit more on how the indicator works, what I'm looking for when I'm using the indicator, so that no one's just like completely left in the dust as to why I took a certain trade or how the indicator actually works and whatnot. But yeah, I hope this helps. Do you guys want to see more videos like this? Subscribe, like the video, and yeah, stay tuned for more videos, guys.